Hello and welcome to Business Incorporated on Channels Television. I'm Temple Ashaju. On the program today, UN World Tourism Organization launches comprehensive tourism recovery tracker. And South Africa's President Cyril Ramaphosa commits to increasing the country's electricity capacity by more than 30%. Zimbabwe sets up food support scheme to benefit 5.4 million citizens. And we begin the show at intraday with market numbers which are all very positive actually at the week start. Here in Africa, South Africa's JSE surged 1.96%, while Nigeria's main index added 0.27%. In Egypt, the EGX30 advanced by 0.63%, and Kenya ended last week's session positive. It's a similar picture in the Middle East where major markets we track were in the positive at intraday. Saudi Arabia's benchmark index rose the most by 0.92%, while the Qatari index was higher by 0.70%. In the UAE, Dubai's main index advanced 0.74%, while the Abu Dhabi index advanced 0.14%. And European stocks bounced this morning, looking to recover from their worst week since mid-June, with a global rise in coronavirus cases and political developments stateside on investors' radar. Let's talk to Ashutosh Pandey at the Frankfurt Stock Exchange now for more on this development. Hi, thank you for joining us on the program this afternoon. We know that European stocks finished in the red last week and fears of a second coronavirus wave are setting in. But are the prospects looking any brighter at this point in time for the week? Okay, so European markets finished in the red last week amid fears of a second coronavirus wave. Are the prospects looking any brighter this week?
Especially after that positive industrial profits data from China and also some positive commentary from corporates like Nissan Motors, which says it could be profitable next year itself. And also the fact that HSBC's biggest investor, biggest stakeholder has upped its stake in the bank. So that was a definite positive. But yes, overall the sentiment is still stuck and they are still actually looking at positive COVID data coming from across Europe. I mean, the cases are on a rise in Spain, in France, in Belgium, and in several other countries. So there is this concern about perhaps sweeping lockdowns returning, like the way we saw earlier this year. So that is actually keeping investors on the edge. So far, there's been resistance by the governments to impose sweeping lockdowns, but we never know as to when that resistance ends, because hospitals have started to get inundated once again in many cities in Europe.
Yeah, Ashutosh, we know that Siemens is actually taking some projects across Africa at this point in time. But again, Siemens Energy is now debuting on the Frankfurt Stock Exchange today. Why is Siemens spinning off its key units at this point?
Well, it's part of its strategy to slim down. It has been actually spinning off its separate units over the past few years. We did see the healthcare unit being spun off in 2018, the Healthineers. Then we did also have the spinning off of Gamesa, the wind turbine unit. So it's part of the broader unit, and the idea is to actually increase the valuation of Siemens as it looks to become an industrial technology company. Right now it feels that it is suffering from what we call the conglomerate discount. So it feels that when the units would start trading on their own, perhaps then that's where the investors would be able to see the true potential or the true worth of those companies. For Siemens Energy per se, it means that it can focus more on its core business and especially at a time when the world is actually going through a major energy transition. So it can actually focus on future energy prospects. Remember, it's still Siemens technology is behind 1/6 of the electricity that is produced across the world, and 40% of that is coal. So it needs to phase out of coal, and that's going to be tricky going forward for Siemens Energy.
I'm very sure we're going to be seeing some re-entry and exits on this deal, actually. Well, so we know the Brexit talks between the UK and the EU are resuming this week. What are the odds of a breakthrough at this point?
It's very difficult to say. We've seen the talks go from one side to the other so many times that it's so difficult to predict. But certainly the negotiators are hoping that some sort of a deal is reached. Remember, this is the last and the final stretch of the negotiations. If you just go by 15th October, that's the self-imposed deadline by Prime Minister Johnson. So they would like to finalize some sort of a deal or a breakthrough on the sticking points by then. Otherwise, they know that it's going to be really bad for both sides as far as future relationship is concerned without any trade deal. But things haven't been made any easy by Prime Minister Johnson's plans to actually renege on some of the commitments he made during the divorce agreement, rather. So right now they are all on the edge and they're hoping that perhaps a deal is reached. The issues about the Northern Ireland has been dealt by through a separate channel where the Vice President of the European Commission and the Cabinet Office of Minister in the UK, they are meeting today, and from tomorrow the trade talks and the talks around future relationship is going to start. So it's two-channel discussions that are happening to iron out all the differences.
All right, Ashutosh, whatever the decision of these diplomats right there on the Frankfurt Stock Exchange, let me wish you a profitable week ahead. And so shares in Asia Pacific were mixed today, with the Hang Seng Index rising 0.92%, with shares of Xiaomi rising more than 2%. Mainland Chinese stocks lagged on the day, with the Shanghai Composite fractionally lower at about 3,217.53, while the Shenzhen Components shed 0.41%. And elsewhere in Japan, the Nikkei 225 added 1.32%, while the Topix Index gained 1.69%. South Korea's Kospi rose 1.29% to close at 2,308.08, while the ASX 200 in Australia slipped 0.21% to end its trading day at 5,952.30. And overall, the MSCI Asia ex-Japan Index rose 0.64%. Now, stocks futures climbed in early morning trading on Monday following a 4-week losing streak on the Wall Street. Futures on the Dow Jones Industrial Average rose 213 points, while the S&P 500 futures and the Nasdaq 100 futures also traded in the positive territory for the day. The tech-heavy Nasdaq eked out a 1% gain last week, posting its first positive week in months, of course in 4 weeks as well, as the technology sector rebounded slightly from the recent deep rout. And the United Nations World Tourism Organization has launched a new tourism recovery tracker to support global tourism as growing numbers of countries around the world ease restrictions on travel. The tracker, which is available for free, covers key tourism performance indicators by month, regions and sub-regions, allowing for a real-time comparison of the sector recovery across the world and industries. The UNWTO Tourism Recovery Tracker compiles all the relevant data in one place, giving governments and the private businesses the ability to track the recovery of tourism at global and regional level, alongside information on the top destinations for international tourism. Zimbabwe's government has put in place an active response to food and nutrition insecurity in rural areas, where it will support 5.4 million all vulnerable people. President Nangawa's administration is insulating susceptible communities against hunger with a long-term goal of ensuring food self-sufficiency. The Information, Publicity and Broadcasting Services Minister says despite the natural disasters experienced by the country, such as drought, Cyclone Idai and COVID-19, government is working to increase food and nutrition security in rural areas to 76% this year from 73% in 2019. And Britain's FTSE 100 now opened 1.3% higher today, gaining some 78 points, with HSBC as the top riser, and sterling rose against the other major currencies in the morning as crucial week of Brexit deal talks now begins. For updates from London markets, here's Juliana, my colleague. Juliana, it's good to see you. But the hopes that the UK and EU can agree a free trade deal in the coming weeks boosted the pounds in the morning. Is that optimism still there at this point, and of course at intraday?
It is. The FTSE's held on to those gains at intraday. As you said, Brexit is right up at the top of the agenda. Michael Gove, a senior cabinet minister, has arrived in Brussels ahead of what is billed as the final round of negotiations taking place tomorrow. There are suggestions from people that are close to the matter that Sir David Frost and Michel Barnier, both of the negotiators on both sides of the channel, are willing to make concessions, which is why we saw sterling rise in the morning. The FTSE All-Share is up 1.58% at intraday. The FTSE 100 is up by 1.53%, and the FTSE 250 is up by 1.94%. On the currencies market, the pound is up on the US dollar by 1.17%, up on the euro by 0.89%, and up on the Japanese yen by 0.95%.
Like the way you crunch those numbers. But quickly, let's talk about the betting company. The race to take over UK betting group William Hill has moved forward this morning. Caesars, the US gambling firm, says it is in advanced discussions concerning a possible cash offer for William Hill, which of course runs the high street bookmakers shops and online betting services. Talk us through this. What will that mean for both companies at the end of the day?
Well, as soon as this was announced, William Hill, they're a FTSE 250 firm, their shares dropped by 12%. And that's really because shareholders are not happy with the £3 billion cash bid that Caesars put in. Caesars, of course, pretty well known in America, especially Las Vegas, for their Caesars Entertainment Casino, which has had all the best celebrities sing on their stages. A couple of years ago, the US Supreme Court did legalize sports betting. And since that time, William Hill have really put their foot and their marker down, particularly in some of the southern states. They have been struggling during the pandemic. Major sporting events here in the UK have been cancelled. Their stores have been closed, and there has been a lot of legal legislation to prevent big betting firms here making lots of money. So Caesars have put this bid in. They already own 20% of their stake in America. So we'll have to wait and see how this goes down with stakeholders. If a deal is going to be done, it won't be completed until the second half of next year anyway.
That's an interesting story to actually follow up on, because shareholders actually wield the key to any business that is listed actually in an exchange. Well, we know the taxi app operator Uber is celebrating this morning after winning back its license to operate in London. What are the feeders that you're getting at this point?
Oh, well, it depends on who you ask. I suppose most people had forgotten that Uber was in a court case. Last year, TfL withheld a new licence for Uber. That's because there had been a series of issues relating to transparency. There was a glitch within their system which allowed a lot of non-licensed drivers to be driving in licensed cars. There was complaints about harassment. They had gone into court, and as you said, after a 3-day hearing, the judge has actually ruled in their favour, so they have had an 18-month extension. We're hearing from London Mayor Sadiq Khan, not really praising the result, but saying that they will be keeping a close eye on them. Sean Bailey, the Conservative mayoral candidate for London, did say that he thinks it's a great move. But of course, the taxis, the black taxis, what London is famous for, they are not happy at all. They're paying an increasing amount of surcharges and charges just to drive in and around London. They're obviously seeing their passengers' numbers plummet. And they said that they want there to be an appeals process, on which I'm not certain at the moment if that will be taking the place. But Uber, once again, gets to keep riding in London. This isn't the first time, by the way, that they have had their licence revoked. The first time was in 2017.
Juliana, try to take an Uber on your way back home, and let's get your reaction and, of course, your feel of this whole experience when you do. We'll bring you more stories across Africa when we return from the short break.
As long as you're paying.
We're back. This is Business Incorporated live on Channels Television. Well, South Africa's President Cyril Ramaphosa says the government will enable the development of more than 11,800 megawatts of additional power generation, in addition to the roughly 30,000 megawatts of electricity available on the national grid daily. President Ramaphosa explains that the new energy will be procured from diverse sources, including solar, wind, gas, coal, and storage. He adds that in an effort to facilitate electricity, self-generation, and as part of the reform processes, the government has removed the licensing requirement for self-generation projects. Meanwhile, South Africans are eagerly waiting for what's been described as the worst unemployment statistics so far. The last quarterly statistics released by Statsa shows that South Africa's unemployment rate was at 30%, and the statistician general Risenga Maluluke says this was the first time the country will be hitting 30% mark. Shepo Molloy, an economist at the Bureau for Economic Research, says the country will see a bloodbath of job losses due to the impact of COVID-19.
It would be a bloodbath in terms of the number of jobs, because for the first time we'll be able to assess the impact of COVID-19 on the labor market, right? So you'd know that a number of analysts, we are forecasting around about 3 million jobs would have been lost as a result of the lockdown-induced COVID-19 measures, lockdown restriction measures, that is. So I think these figures are just going to illustrate the impact of COVID-19 on the labor market. But we're expecting the figures to be quite worse than the market anticipates, given that I think for the longest time, and you would also know that Stats SA has also been lagging behind in terms of the release of the official statistics. And that was due to the lockdown measures. They couldn't go out and collect the data. So I think for the first time now, we'll be able to have a true assessment of the impact of COVID-19 on the labor market. The tourism sector, unlike a number of sectors, they have been on full lockdown, right? So we've also closed international travel, and you would know that the tourism sector benefits fundamentally from international travel, be it in terms of the hotels, be it in terms of some of the entertainment areas as well, right? We also had a protectorate period of alcohol ban, for example, which is also quite key in terms of supporting the restaurant and the tourism sector. So most definitely the tourism sector has been the far hit sector in terms of COVID-19.
And last week, Zambia asked investors in its US dollar bonds to accept delays in their interest payments into next year in what would be described the first African debt default on private creditors since the pandemic. Now, President Edgar Lungu's government says it was seeking the suspension of debt service payments for a period of 6 months from holders of its $3 billion worth of international bonds beginning in October. And joining us now to talk about the impact of these on business in the country is Matt Kindiger, an associate practice lead for Sub-Saharan Africa at Docker Frontier. Good afternoon. Thank you for joining us on the show. Talk us through how Zambia's default on its debts to private creditors will likely affect businesses in the country. And do you expect the government to turn now to the IMF for some kind of a bailout package?
Sure. Well, thank you for having me on the program today. So certainly businesses are likely to be affected in Zambia. And I think most importantly, they will be affected by the kwacha, the volatility in the kwacha. So we are expecting to see some more rapid depreciation of the kwacha over the next couple of months as a result of the default. So this could create some planning difficulties. Also, I would say that the prospect of a default has already been priced into the kwacha. So it may not be as volatile as some people expect it to be. We're also expecting there to be difficulties for companies getting access to loans in Zambia, and this is because banks' balance sheets will be under significant pressure in Zambia as a result of the effective default. And in terms of whether the government will look for a loan from the IMF, so it has stated that it is looking for support from the IMF. But even if it does enter into a bailout with the IMF or a program with the IMF, it will probably drag its feet in terms of implementing the provisions of the bailout. And this is because there is an election in 2021, and it probably won't want to implement the difficult and painful measures that the IMF bailout would require.
Well, I recall that looking at the numbers from Eurobonds markets across Africa over the weekend, I mean, Zambia actually got a serious shift from that. A lot of investors shifted from that market to other parts of Africa, other Eurobonds in Africa. But we also know, Matt, that the economy has been one of the most exposed in sub-Saharan Africa to the decline in commodity prices since March this year when the COVID-19 pandemic began. So to what extent will the recent upswing in copper prices help to counterbalance the whole effects or impacts of these on the country's weak public finances at this point?
Yes, so I mean, Zambia has been really badly affected by the decline in global commodity prices, especially copper. So a real shock to the economy, and it's one of the reasons why public finances are in such a bad state this year. And so the upswing in copper prices certainly is welcome, and it does mean that the government's tax revenues will improve a little bit more than we previously expected. But overall, it won't result in an inflammation for public finances. Public debt is too high, the budget deficit is still too large, and this means that the government's revenue base needs to expand much more quickly, much more broadly, in order for there to be a meaningful improvement in public finances. And so we're still also expecting a pretty deep recession this year for Zambia, around about 5% as well. So although higher copper prices are positive, it won't solve the problem.
Well, there's a growing concern about the impacts of the COVID-19 pandemic on public finances across SSA, that's Sub-Saharan Africa. In your view, which countries are most at risk at this point, that's at risk of the debt distress, and are we likely to see more sovereign defaults over the coming months or weeks, in fact, because we're ending the Q3 2020 at this point?
Yes, so, I mean, there's been growing concern about the risk of debt distress and the risk of another default across Sub-Saharan Africa. So there is worry that Zambia will be the first of many. It's worth noting that Mozambique remains in default. It defaulted a few years ago. There are a couple of countries that we are watching here at Duck Frontier. One is Angola. It has a very high debt-to-GDP ratio, and it really has struggled to adjust to the loss of oil revenues as a result of the oil price crash recently. Chad is also another market that we are looking at. It's also looking for debt relief. And Ethiopia was one on the watch list. It is facing some fiscal pressure. We don't necessarily think these markets will default imminently, but there is increasing risk we will face debt distress over the coming months.
I mean, a lot of these countries are currently seeing a debt-to-GDP ratio of some 60-something% actually. Lord help us all. Well, Matt Kindinga, thank you so much for your analysis. Matt Kindinga is the Associate Practice Lead for Sub-Saharan Africa at Docker Frontier. And that's it on the program this afternoon. Thanks for being a part of it. I'm Temple Ashaju. I'll see you next time. Bye for now.